What's up, everybody? Welcome back to the legendary, the one and only Go Rush weekly watch list. Happy Sunday, everybody. Hope you're all having a good weekend. Hope you're having time to detach from the market, but obviously not detach too much because we got to be in tune, right? So I'm gonna go ahead and get started. Yeah, I'm gonna go ahead and get started. So go ahead and check the screen out. For those of you that joined on the hotline, welcome. Good morning. If you have any requests, just go ahead and throw them on the trade floor. I have a very, very big list to get through today, so I'm going to do it as quickly as possible. If I'm going too fast, please stop me to ask questions because I love to answer your questions. So the first ticker that I'm looking at is SPY, SPX, right? Whichever one you want to look at. But let's just stick to SPY for now. So SPY was in this down channel for a bunch of, since the top of the channel, March 29th. And just falling in a down channel all the way until it broke out here on the 28th of July, right? So 4-month channel. Right now we're trading right within this previous supply zone. So if you see that where price kind of consolidated here and then fell hard, so we're right back in that zone today, right? We're right back in that zone. That's why we haven't ripped through the way that we kind of ripped through since down here, right? So I'm gonna, obviously we watch it closely every single day. Throughout the day, on every time frame, 5 minute, 10 minute, 1 minute, whatever you want. But I'm going to continue to watch it on the daily to make sure that, where we are in perspective to this previous zone. So because if we fall out, we can fall pretty hard. And if we break out above, then we have another zone to test, right? And I don't want to really give it a direction. I'd rather it give me the direction and we kind of take the trade, take the trade, whatever trade that it gives us, instead of trying to force it. So, but with SPY, we are in this previous area of balance here, a supply imbalance. And so I would like to see it get out of the area really, but there's nothing we can do until it's really out of it. In the meantime, we take our profits quickly and we make sure that we don't trade contrary to the market. So let's go into the watch list. I have a bunch today. For those of you that just joined, I'm going to go through this as quickly as possible. So the first one is Carvana. We've been playing Carvana for a couple of weeks now, and Carvana had earnings on August 4th. And even with negative earnings, let's see, they reported a negative 21% earnings per share and negative 2% revenue versus expected. So not good earnings. However, I think that there's still investors are still finding value in this company because look at the move that it made this next day, right? This opened at 34 and it closed at 46.98. So nice big move out of a very bad earnings call, right? And now, so I'm looking at it. So if we look at it on the weekly gives you better perspective. So the weekly gives you a bunch of kind of a basing forming here. It gapped up, but then it failed, and then it based a little bit more, and then it's instead of gapping up, now it's slowly working its way up until it kind of just broke through that downtrend resistance. So now we're through the downtrend resistance that we got through last week, and we're above this pivot here. This is a very important pivot because we had 1, 2, 3, 4 days of selling, right? And then a big move down. Now we are gonna get to an area where we're gonna take out all highs, right? Like this is just straight day after day making new lower highs, and now we're gonna take them out potentially, right? So that's why I put potential upside pivot machine gun. Now I think I put this on during our study hall session on Tuesday. I think I might have put this here, but it's still valid, right? Because what we're gonna see is we have this high, we have this high, this high, and this high, all to be taken out. What happens is people leave stop losses here. The people who go short leave their stop losses here, and when the stock price reaches that area, they are forced to cover their shorts, meaning they're forced to buy the stock back. Instead of selling it short, they're forced to buy it back, and what they do in buying it back is they force the price up. So we can get a nice upside move continuation if we reach some of these levels, especially this. I think this level here, where this pivot is right here, I think this level will be a key area for us. So let's just keep it on watch. I don't have really a plan for it right now. What I will say is if it opens in this area, I would take it above 48.15. And then I would play it into the 50s, right? Into $50, from there $51. you just have to be very, very quick with it, I think. Carvana seems like one of those that, let me just mark 50. Carvana seems like a company that might be getting squeezed. And what that means is there's a lot of people in the trade, and so you have to be fast with it. Otherwise you get stuck holding a bag. So, and I don't want anybody here stuck holding a bag. So just play it from the open into $50 mark. I expect it to pull back hard at the $50 mark because it's a $50. It's just like a psychological number. But we'll keep our eye on it, and we'll play it together. The next one that I have in my list, let me just take a look at the, okay. Next one I have in my list is X. So I called out an X call for this week, and called out on Friday. X is forming kind of, it did kind of this cup and handle here, and it broke out through the resistance, all this resistance here on these few days. And we filled some gaps, and now we're kind of just trading within the range of this one candle here, right? So so just to tell the story, it had good earnings, nice beat on both sides, right? And then we kind of hit a wall, pulled back, tested the wall again, pulled back, and then tested the wall one more time. This next day, so let me just zoom into this a little bit, right? And all these lines are still valid, so we could just keep these lines intact. This next day here, so on this day we had like kind of an indecision day. It formed a doji, but the range of this day was much higher than the range of these two previous days, which means range is getting larger, right? You can see how price went all the way up to 23.76 and as low as 22.28, right? Versus this day was the range was much smaller. I think it was like a 60-cent range on this day, right? So the range is getting larger, and we still ended the day green, right? And now on this day, we opened higher than the previous open, and we went higher, and we closed higher than the previous close. So that tells me that we're trending upward, right? So I'm looking for the next candle to kind of open where this one closed, right around here, right around 23.32-ish. From there, you know, we can kind of test the low, maybe test the close of this day, test it as the low, and then work our way up. So I'm looking for X to go up and kind of break this. And if you're looking at this, this part on your screen now, let me just, this part here, it looks like X is working its way up, bull flagging, and looking to break out of that bull flag, right? Technically we've already kind of broken the downtrend on these few days because we have this high, you know, these highs here, and we've broken through that resistance, and now we're above the resistance. So so X is like kind of an easy one for me, especially I'm always overall bullish on X. The other thing I'll say is that we're approaching this area of balance here, this area here, which is the same thing as what you saw on SPY, where move it over, just the chart. Okay, you know, it's the same thing that we saw on SPY, where we have a consolidation plus a massive move out. It's actually on the same days, right? This is all most of the market looks like this, especially if it tracks the S&P pretty well. So the only thing I'm worried about is how we're going to react once we kind of get into this area. Are we going to sell off hard, or are we going to chop around inside of it like SPY did? Now, we're in 24 calls for this week, 2350s actually, and then 24. So we should be relatively safe as long as it kind of fills this wick up, this wick right here. As long as it gets filled up, meaning as long as price comes and works its way up into the top of this wick and basically to the top of that range, then I think that we'll be safe. And we won't really be susceptible to whatever's going on with the supply zone here. But I'm just looking for it to kind of pop, work its way up here, and then by the time it gets up to 24.28, I'm out of the trade. Like, there's no reason to kind of hold it beyond that, right? And to be real honest with you, like, you see these pops that happen in the morning, I'm looking to sell within one of these pops. You know, you say your price, you say your target, 50% fill, automatically set it, and then maybe the morning pop you get filled, and that's that, and you're done with the trade, right? But I'm interested in X, and I always keep it on my watch list. I think it's a great company to trade. So I have it on for this week. So the next ticker that I have is, and another thing, they had dividend payout on Friday. And whenever dividends pay out, usually the stock price pulls back a little bit. I would say that this week, this dividend payout didn't really affect the stock price of X, even though there is a big upper shadow, a big wick on the top. But, you know, it's not like a red day or anything, so I don't think it's really affected. Let's see. Next one is TSM. Now, I've been trying to get this broadening formation here right. So you're going to see it looks kind of weird there, but Let's see. Yeah, it looks weird. I can't get it right. I can't get it right. So I'm just gonna get rid of it. But I just want you guys to see that price is maybe this one. See, that one looks a little bit better. Price is working its way to find new highs and new lows, right? We had a doji on this week. Let me just zoom into it. Right, we had this doji. We had a bunch of stuff, and then we had earnings, which is a good report. We had this doji here, which is an indecision candle. Like what are we gonna do? Which way are we gonna go, right? And then it kind of worked its way down and is working its way to make higher highs. Now, I like these things to kind of work and make lower lows and higher highs to really expand the range. But right now, TSM is just showing it's very, very bullish, right? Like it's just not even really giving us a downside test. One thing I'm scared of with TSM is that, you know, it has this and this, these 2 days, where it kind of tested the bottom of this range. I'm scared that it's going to reject hard and fall all the way down here, which is fine. I mean, you know, we're not in any calls right now or anything. And if you are, then just be aware of that. But, you know, I'm overall bullish on this industry as well, especially this company. And, but if it can't break above the high of this candle and get into that previous consolidation area over here, up here at like 93-ish, then I think that we're going to come back to test some of these lower levels, like around here, around 79, 78, 98, 79-ish, and maybe even 75. Now, if TSM comes down to 75, then that would be a gift, and I think that you should load it if you like it, right? So just keep that in mind. Let me see. Just check in the chat to see if I'm missing anything. Okay. So, and once again, if you guys have any requests, go ahead and throw them in the trade floor, study hall, wherever, and just add me so I can find you. So I like TSM right now. I like to see it kind of retest the high of day. It is in this broadening formation, so I'm not going to do anything with it until I see what it wants to do. If it opens up between the range of this close and this high, so between the range of the close is 89.77 and the high is 90.98, right? So between that range, that $1 range, and it starts showing me that maybe the market wants to pull back, I'm going to short this. I'm going to short this from wherever it is down to the bottom of this candle. Right, we can play TSM puts, I would say, into the bottom of this candle, and that's just to test the broadening formation at the end of the day. So, so really, I'm just gonna play within the candle for the first day, and then maybe have a better kind of outlook for the rest of the week once Monday rolls around, and especially once the market future market opens up, and we know whether SPY is gonna be up or down for the day. So, I'll be watching it. Right now, I like it for the downside, but I don't want to put my foot in my mouth with it yet. The next one that I have is UPS. UPS has been trading phenomenally. You know, it found this kind of range. So now you see it looks very choppy down here, but if we go to the month, you'll see that it puts it into perspective. So on the monthly, it's just, you know, price came and tested some of these lows, and buyers have been buying it up the entire time. And now, and the lows are getting higher, right? And so that's all the perspective that you really need, right? The lows are getting higher. The highs are also getting higher, right, on these 3 weeks. And then no seller stepped in on this week, on this month. No seller stepped in. And now in this month, we have very little sell pressure and lots of buyers so far. Let's go to the weekly real quick. Yeah, the weekly, I mean, it's just like sellers, but indecision as well. You see all these dojis on the weekly. Imagine trading these, like day trading this every single day. You got to go up one day, down the next. Like, it's crazy. Even with all the sell pressure on this day, it managed to put in kind of a reversal pattern, right? You see like a morning star kind of reversal pattern on the weekly here, right? Big move down, doji, big move up, and price is kind of working its way back up from there. So let's go to the daily. So I would ignore that broadening for now. I would ignore this broadening for now. I don't think it's really playing out. So I'm just gonna get rid of it, actually. Yeah, get rid of this. So we're above all of this area of balance here, right? And you can see that it wasn't as strong of an area, but you can see that it did affect the price of UPS. Let's go from there. You can see that it did affect the price because we had some sellers here, right? When the price came back to it, every time price kind of reached it, it sold off a little bit. Over here, it gapped down. And now it looks like we might have taken out all of the sell orders that were sitting there. So it might have just, you know, we might be done with it. And now price is testing this previous resistance here on the left on these days, the upper range of this box, it's now testing it as support. So that's good, right? So resistance has flipped into support, tested it 3 days in a row, and now it's making a nice move up from there. Above this pivot here, which is 196.92, we'll get 200. Above 200, we get 202. So I'm not gonna really talk much about these two levels up here, but I think that if we can get, and did we have earnings already? Yeah, we had a good earnings. We had a positive earnings, a good beat on both sides. So you know, these are your levels: 196.92, 200, and 202. And I would add 198 in there just to keep it symmetrical, right? 198, play every $2 range pretty much. Just put 198, just edit it. 200 is going to be a tough level because it's a psychological number 200, right? So just be aware of that. And yeah, this is just very clean. I mean, higher lows, higher highs, kind of a bunch of cup and handles, head and shoulders, whatever, however it looks to you. But the most important thing is that buyer stepped in. Buyers stepped in and are bringing it higher. That's the point of all of those patterns, is to show you that buyers are stepping in and bringing the price higher. And now we're breaking this. You know, we're making all new highs of month, right? 1, 2, 3, 4 months straight of making higher highs and higher lows. So we'll go to the week. So, and the only thing that concerns me a little bit is that we're a bit extended from this trend line. Like, we've been trading and playing this trend line pretty close. So I don't want to see it like pull back and go all the way down to the trend line, but I do like where it's sitting. It is showing a lot of strength. It did find the base for a very long time and is now making a nice move out of that base. And so, and like I said, I mean, not only higher highs and higher lows on a weekly, but we on the monthly, but we have higher highs and higher lows on a weekly, right? Expanding the range to the upside on the weekly, right? So, and we're not gonna marry this thing. I mean, if we get a play that we can swing into a couple of months, that would be great. And I'll make sure to see if I can find one for us, because that's my style, and swinging for a long time, even if it's for like 1 or 2 weeks. But you know, right now I see 196, 198, 200, 202. Just want to take out these candles here and work our way back into this range here, which is around 203.94, back where this price action is right here, for UPS. If you have any questions, guys, just go ahead and stop me. Otherwise, or if you want to obviously look at requests, go ahead and drop them in the chat somewhere. But I'm going to keep it going. I have a bunch to go through. So the next one is Oxy. So the reason why Oxy is on a watch list this week, energy plays are always a good hedge. Sometimes when the market's red, and this is like in a regular market that we kind of are used to and can expect certain things. Like, for example, when the price of SPY or tech goes down, VIX goes up, right? That's like a regular relationship. Lately it hasn't really been that way, but sometimes you'll find some days it'll kind of fall back in line. So the reason why I mention that is because energy typically likes to be the only green sector whenever everything else is red. And this is prior to 2022, because in 2022 energy has just been on a rampage. But prior to 2022, so in 2020, 2021, whenever there was a red day in the market, you would see money flowing into energy and energy making crazy moves. So I just wanted to mention that. I'm not going to say that that's the relationship now, but just watch it. It might turn into that. It might turn back into that, right? So what I like about Oxy, and the reason why it has my attention, is because we had good earnings, obviously, on this day, good beat on both sides, and then price kind of fell out of good earnings. I guess they wanted more. Maybe people are fine with the profits. That, you know, that maybe these people here are taking, or all these people here are taking profits from way back here. You know, back in a year ago, right? When price was at, who knows, $15 or whatever, right? So they made their money. But Oxy's been holding this trend line that it started forming on the 22nd of April, the 25th of April. And it validated on these days and on this day. And now it's kind of fell hard into it, like pretty much on its head. But then it's getting back up, right? It's doing that Undertaker meme where it just kind of gets up out of the casket. So I'm watching Oxy. I want to see Oxy, and it might give us opportunity on Monday. you know, Monday morning. But what I want to see is I want to see Oxy above this level here, 60.70. I want to see Oxy above the candle, Thursday's candle. I want to see Oxy so it can really confirm the reversal, right? Let me go to the weekly real quick. So you can see a bunch of buyers here. You know, I basically want to see it retrace at least you know, all of this wick and at least into this area with this green box. Just get into the green box. Right, so pretty much undo this candlestick here and touch this green box, and then from there I think that will be it'll be like a clear sign of reversal. If maybe I'll see it, you know, open up and work in this area and kind of be bullish. And if it's like 4 or 5 green candles in a row at the beginning of the day, I might call out a play on it. If it shows me a strong, maybe if it falls down and retests this line and it shows a hard reversal, I might call a play on it. But I like what it's done at this trend line every time it's tested it. Right here, nice little bounce, big bounce, and then little bounce, big bounce. So you might get a little bounce and a big bounce again. But anyway, I'm bullish on it. If it breaks this trend line and it holds and it starts forming red candles down here, then we got some nice downside plays to test, right? Low of that day, there, right? Those will be your downside. But again, I'm not married to it. I'll take whatever direction it wants. I usually like to play energy when it's moving up, because that means that the rest of the market's moving down. If energy is moving down, then money's somewhere else, and so I'd rather, like, if it's tech moving up or something, or one of those discretionaries, etc., then I probably wouldn't. I probably wouldn't take this to the downside. There's more attractive things, I think, in other markets. But if everything else is red, then I would look into oil. So I'm looking at, and I'll take a break just from looking at these charts for a second. I'm looking at Trade Floor, where Homegrown Wealth said, and he's asking a question, and he's asking a general question, and everybody should answer this question. He says anyone can answer, but everyone should answer what they look for. If you have to pick one option statistic that you had access to, what would it be? Volume, open interest, Greeks. For me personally, I'm constantly looking at volume. OI is good because OI gives you a gauge of where people are within the trade, whether it's a good chain to be in. But volume to me is a bigger key. You know, there was a point in time where I was just playing. I had a scanner that was just catching unusual options activity, which is when volume goes over open interest for the day. And I was calling out plays in Gold Rush based off that, and I was catching, you know, during that couple of weeks, we were catching some bangers, you know, 300 percenters, 150 percenters, overnight swings, etc. Now a little bit less. Now it's for me, it's a little bit more price action, etc. But I would say volume. The Greeks, I don't even look at the Greeks anymore, although I think they're crucial. I kind of just have them committed to memory based on the tickers that I play and how far away you are from being at the money. But I would say personally, volume and open interest for me, homegrown. Hopefully someone has a different answer and they can explain it, but that'll be it for me. So the next one on my, just go over. You're welcome, bro. The next one on my list, and that's extremely personal preference. You know, everybody trades differently, and where's this news? Oh, here it is. Everyone trades differently, and we all look at different things. For me, it's just what works, right? It's, you know, I like to see volume coming into the trade. I like to see volume on the day, on the ticker. So volume is very important to me. The next one I have is GME. GME weekly chart is beautiful, right? The weekly chart, obviously, all the manipulation, everything, the whole history of GME. But now, the most important part, I don't know, what the hell is this? The most important part of GME that I have is that we've been forming higher lows. And not only higher lows, but higher highs, right? Forming higher highs. Now, I'm not gonna say there's a broadening here. I don't really see a broadening. Let me get rid of this stuff because it's gonna distract me. So I was looking at the weekly. for some reason. And I noticed that that we broke out above previous resistance. Now I'm gonna show you another weekly chart in a minute that made me look at GME. But anyway, GME, I think GME looks really good. Let's go to the monthly real quick. Yeah, I mean, you got a bunch of buyers down here, and then you can see that slowly price is trending upward, right? Bunch of buying pressure down here, and now price is slowly just working its way up. Even though we have a couple of big wick dojis here, long-legged dojis, I think that, you know, we made a higher high on this week, on this month, and now we look like we're gonna try to make a higher high on this month as well. Let's go back to the week. And in the weekly, we have this kind of channel, and but strong buying presence this week. To go to the daily, it's just, the daily is just a very nice setup, because we're reaching a previous pivot, right? We formed kind of this cup here, and I don't know if we're gonna handle or if we're gonna just break through, right? So so what I'm looking for is for it to break this area here, break the high of this pivot there. Let me go ahead and put that in a different color. Right, so break above that, which obviously rejected on Friday, and then from there, and I'm not bearish on this at all. I wouldn't play puts on this at all at this moment. If GME gives us a red day, then I'm not gonna participate, right? That's what I see. And GME GameStop is at a point now where it's like a little less volatile. You can trade it and not lose all of your money, not be absolutely gambling. So it's on the watch list officially now. So above 40, you know, hold above $40. We can try 41 and 42. I'm gonna put, let me see if I have a 41 here. I'm looking at it right here. 40.78, whatever, close. Right, so I want to see it hold above this pivot, this high here, and then from there we're gonna play calls. If you like puts, then I won't have a setup for you. I think that we would have to undo this entire candle, and it might take a few days. It might take one day, right? But I don't see it. I mean, basically based off of all of this kind of indecision, even with buyers still in control, and then massive move up, I don't see it pulling back hard. And it could, maybe it could. It did the same thing back here. Indecision, massive move up, pull back hard. Maybe, who knows? But it's gonna stay on the watch list. I like it to the upside. Those are your levels. The reason why I saw GME was because I was looking at this chart, this AMC chart, this AMC daily chart. Let's look at the weekly real quick. The weekly chart showed you like real strong breakthrough resistance. Look at all this resistance, all these weeks. It went back into the price action of April 4th, the week of April 4th, right? Let's go to the monthly for consistency. Yeah, I mean, monthly is just, the monthly is like, you can kind of see where price was going to make a U-turn, right? You can see where price kind of worked its way and made a U-turn. This is a very, very hard pivot for AMC 2524. Go to daily. So, I mean, very interesting day here. Good volatile day on Thursday, and then we kind of just we fell down from there. We broke through toast level, gapped right through it, went all the way to close at 22.18. So if I were to set levels on this, we'd have to hold this level here, 21.92, and then this will be our new range. I think between 21.92 and 23.96 will be our new range. Above that, we can try to test this 25.28 level. Below that, below a break of 20.70 right here, 20.70. If you look over to your left, is resistance on this day. Resistance. A little bit of sellers over here. Resistance, support. Right. So that 20.78 number is crucial. So I'm gonna go ahead and give it a. I'm gonna make it a little bit thicker, just so it looks different on my chart, and so I could take notice of it, right? So we really have to hold this level, 21.92. If you want to take a put play on this, then I would take a put play from the break of 21.92 down to 20.70, and I would get out of the position at 20.70 because you gotta watch what it does at 20.70. Otherwise, if you want calls, then just take it above break of day high, right? Break of day high. Above break of day high, we have this body here, and then from there, you know, you kind of have like a little ladder to work your way up. I like it to the upside. If you want downside, I would take it down into this 2070 and no further. If it does break below this level, then you can get a nice move down back into 1839. I just don't see it happening, especially with a good earnings. This looks like earnings was a catalyst for it to move because it had good earnings, 14% and 2%, right? $3 surprise, 3-cent surprise earnings per share, and $31 million revenue beat. So both very good numbers, and you can see that AMC investors like it, and they bought it here, and it's working its way up. Let me just see something real quick. And the momentum indicators all support upside move, right? TTM is firing to the upside, right? Light green candles firing to the upside. MACD is working its way up, right? So, and it's going pretty strong too. It's accelerating pretty quickly, right? So that shows that there's a bunch of momentum, maybe 2 more days or one or 2 more days up, and before, if it wants to turn around, maybe it'll do it. But it looks really good. AMC looks really good, and that's why I had GME on my chart, because of AMC. So, you know, not as strong, but similar, right? And then momentum on this shows, you know, it's gonna follow the other one, so they usually follow each other. So it looks like it's working its way up, and TTM, it looks like it's firing up. Yeah, it lost some bullish strength, and it regained it on these past couple days. So these are both good setups. Next one is CLF. So Cleveland Cliffs, we hit Cleveland Cliffs last week. We got some profits, made some nice money on it. CLF is at a point where it's kind of formed a cup, and maybe you can call this a handle. Maybe you can call this a handle. Maybe there's another handle that's going to form here, right at the previous resistance line, right? You see this box over here. You see like kind of where price found support in the past over here to my left, February 4th, 2022, right around this price area where we are now, and kind of moved massively from there. So maybe we find some traffic in this area, and kind of chop around a little bit before we make a big move either up or down. Now CLF had bad earnings. They did beat on revenue, but they lost on earnings per share. And so that's why you see that we had this big red day, but then price recovered immediately. It took like 4 days, and price just undid this red candle. And now it's working its way into making new highs. I think that the market is just ready. You know, for now, I think that a lot of the companies that brought the market down are ready to bring the market back up. Now, CLF isn't, it's not a strong constituent of S&P. Like, it's not so heavily weighted. So when S&P falls down, CLF can go the other direction, doesn't need to go with the market, which is good, which is why I like it. But it does have some of the same patterns, right? Some of the market consolidation and fall. And it did make a nice move up from its lows over here in 2020, March 2020. And it was a little bit slower than all the other companies, but it did make a nice move up. Down here we were trading at $3, and it hit a high of $34 bucks, $34. So and now it's kind of holding where it is now. Actually, I'm seeing something on, let me see the monthly real quick. And CLF, for anyone who wants a history lesson, CLF was at 121 in the past. So interesting. So what I'm seeing that made me look at the monthly is this broadening formation here. Looks like it's here, right? And then on that same candlestick, we kind of have that. Now this is very aggressive to the upside. There. Let me just adjust this real quick. So I think this is very aggressive in both directions, but it's there, right? It's there. So, and the same thing, and now CLF, a competitor or a peer of CLF is X, US Steel, and X has the same broadening formation, right? You see it in the dashed blue lines. So, and X is reversing, and that's part of the reason why I like X2, is because not only is it forming that handle and making those new highs, but it also bounced off the bottom of that broadening, right? And CLF looks like it's doing the same thing. It's bouncing off the bottom of that broadening. So let's see, right? Okay. So Anyway, I like CLF for the same reasons I like X. If you look at it, it's forming higher highs and higher lows on a daily. It's channeling up. It kind of looks like it's forming a rising wedge. This particular stock, right? It looks like it's forming like a kind of a rising wedge here, which is a bearish pattern. For those of you that don't know, rising wedges show that bulls aren't in full control because they can't just rip up in a very aggressive fashion. They're slowly chopping it up. And this candlestick, I mean, it was an earnings catalyst, so this candlestick kind of, it's. What I was gonna say before I saw the earnings is that this candlestick shows that bears have it. They're just kind of letting the bulls bring the price up so they can sell it off. But this was the earnings catalyst, so this will be the bearish thesis, is the rising wedge, and the loss in. You see how on the MACD we're kind of losing strength. Oh no, this is strong. Never mind. All right, so first targets to the downside would be break of day high, break of day low. Just play into the lows, right, and then play into that. Let me get rid of these. Now I'm not bearish on this. Every time you see me put out a CLF play, it's always a call. I'm not bearish on this at all. If it comes down, if CLF is falling, there's usually a better play in the market, personally. But break below the low, play down the lows. Break above. I have these two previous zones. I would take a 1840, break and hold, and kind of form a base above 1840 on a 15-minute time frame would be enough for me to want to jump in, right? Now, obviously, you guys know the way that these things trade is, and everything in the market, what it does is it kind of makes a big move at the open, and then from there it makes its decision. On this day, it gapped down hard and then it reversed, and then it kind of closed lower than it opened, but it still pretty much undid the entire day with the reversal. On this day, it traded flat. Nice. This was actually a good setup for these 2 days to jump in. And then once it broke above the previous day high, the previous 2 days high, did it on one candlestick, and then from there it kind of ran, and then same thing over here, did it on one candlestick, and then it ran, pulled all the way back. So I say that to say that basically I want it above 1840. It can easily gap up into like the $19 territory and then pull all the way back. So if it gaps up, unless you want to scalp it at the very beginning of the day, first 5, 10 minutes, 15 minutes, whatever, 30 minutes, cool, keep your eye on it. And especially now, it looks like on a 30-minute, it looks like the MACD is going to work its way back to zero, which is bullish based on this loss of bearish momentum here, right? It's went from strong red to light red. So now it's working its way back to zero. So it can give you the gap up, which you can scalp. And then if it pulls back the way that it normally does, then I want to see it kind of hold above 1840 and kind of form a reversal pattern here above 1840 on any time frame above 15 minute. From there, I'll say, all right, cool, let's go to the upside. It could also easily just pull up, gap up, and then rip down, which I'm looking for. Like on this day where it kind of gapped up, it opened, it came up, broke all previous highs of day on this day, so it went up above the previous resistance and then immediately sold off like crazy. Right, like that break above previous resistance would have been nice for me to be like, oh, let's go, it's bullish. Especially with this kind of spring, this gap down here, work its way up, break above, and I would have been like, all right, let's jump into the 17 and a halves, and then we would have got killed. So it's important to look at these things on multiple time frames. But I like CLF. I like it on the daily a lot. So if you like it, if you traded it with me this week and you made money, then keep it on your watch list. It always pays. That's a good ticker. The next one that I have, and if you guys have any questions, I'm going too fast, or you want to make any requests, go ahead and drop it anywhere. Just add me. Next one I have is, and I have like 10 more. Next one is AMD. AMD broke up through the down channel. And if you look, this has been channeling since the beginning of March or the end of March. Following the market pretty closely. And so now I'm looking at it like we formed an inside day on Friday. First of all, out of the bottom of this channel, we made a nice big move out of this channel, right? Good earnings. I heard that guidance was pretty mid compared to how they normally guide. But I think that the market and so the earnings was after hours, and that's why it opened down way down here at 90.48 the next day, right? And people were talking about how Lisa Su, who is the CEO, wasn't as excited as she usually is during these calls. So I think, and especially with guidance, I think that's what made it come down. But even with a weaker guidance, people are buying it, right? They're buying it. So we put in a big bullish day on Thursday. Friday we put in an inside bar. Inside bars are nice and easy to trade because what you can do is, and I have some levels here. I'm gonna keep them, but what you can do is you set the range of the day, high and low, right? And then if it breaks above the high, take calls. If it breaks below the low, take puts. This looks like the sellers are active at this area and they're bringing the price back down. And so I would like to test it. I would like for price to come back down into this resistance here at 99.28. So basically a dollar move to the down, $1.50, $2 move to the downside. What was that? 198. Yeah, so a dollar move to the downside and change, right? Back down. Find the base within this area where these 3 days, we found resistance, right? Just form a base in this anywhere in this area or above, for some longer swings, maybe some September, or maybe some end of August swings, right? But right now, I mean, same thing, kind of a cup and handle vibe. We rejected this previous fib, which is interesting. So take it above or below this range of Friday's price. If it breaks out above, then we have some previous levels here. This level here is going to be very tough to beat. That 109.54 is going to be very, very tough. I think there's a supply zone there based on the fact that it kind of went sideways a couple days and then fell down hard. And it also did the same thing back here. Went sideways and it fell hard. So I expect it to do the same thing, at least go sideways, and then from there decide whether it's going to fall hard or slowly work its way up. I like it to the upside. Again, this is in conjunction with like TSM. I like it to the upside. I see a little bit of downside on it, and they're in the same industry, right? But I like it to the upside overall, and I think that AMD, especially how strong it's been showing price on the weekly. and what I like too is excuse me, 1, 2, 3 candles to bring the price from here. Well, 4 candles. Let's count this one. 1, 2, 3, 4 candles to bring price way down here, and then it's been slowly working its way up, right? It's not going too fast. It's not being too aggressive. It's very intentional in working its way back up. So I like that. I don't like these fast, rash moves. I like slow, intentional moves, deliberate moves, right? Healthy pullback. Maybe we got another one here, or we had one on this, from this day to this day, but maybe we get another one before we continue to work our way up. And it seems like Frank and BT and Tommy have a good sense, and some of you guys who are on voice have a good sense of AMD. So if you see anything on it, go ahead and let me know during the week. I usually don't watch it during the week, but sometimes I do. Depends. So if you see something, let us know. If you see something, say something, how they say on the subway. All right. Next one is Lowe's. The reason why I like Lowe's, I think I saw it on a weekly. Yeah. Now you can call it a inverse head and shoulders, potentially. Right? You have this shoulder, the head, and then you have a higher low here, higher than this low. So that would be an additional shoulder, right? So maybe that's what you see, right? And if you see it, then cool. Maybe you see a cup and handle where prices here falls down and it went sideways and now it's working its way up. What I see, and the reason why I like it is because price came up to an indecision area, fell hard, consolidated a bunch of weeks, and now it's forming an upside H, right? We had the long part of the H, the pullback, and now we're kind of showing strength into earnings next 2 weeks, right? One day. It made a strong move, consolidated, fell hard, double bottom on the bottom of this cup or this head or whatever, however you want to call it. and then it kind of gapped down here after a dividend payout. For whatever reason, I guess there was news on this day that made it gap down hard. I don't think the market did this gap. And then it's been slowly working its way up, showing a lot of good strength, especially on this day. It undid this whole red candle, and the next day it kind of made a higher open, higher high. This day made a higher open, even though it's just slightly bit higher open. This is actually almost a bullish engulfing, the way that how strong it is, right? So lows, I want to see it above the break of day high, break and hold, and then this is outside of the range, right? That 199.66 would be outside of the range. That would be your absolute safest entry. From there, we have, I would say around here. Actually, before that, I would say around here. So 199.66, 273, about $1 move. From there, 203, and then we have a bunch of sellers here, and then we have there to the upside. So I like all these levels to the upside. For context, you know, we had all these levels drawn out, and they can all get taken out in one day. Like this one day took out 1, 2, 3, 4 levels of mine. This day, if I would have had like 5 more levels, and it took them all out in one day. So, and sometimes, you know, sometimes let's do Apple. Sometimes it does this where it kind of like takes 3 days to just touch one level, right? But anyway, I like these levels. I like how much strength is showing out of this range, out of this cup. It basically fell all the way down, and buyers brought it all the way back up. So buyers are in control at this time, you know, for now, right? And if you like the downside, then you have a nice play here to the downside. You could just take the low of Thursday, play it into the high of Monday or Tuesday, into the low of Wednesday. But I don't like the downside so much. I like the upside much better. I'll show you why. I like the upside much better because you can set your risk to the open of the day, or you can say you have like a predetermined risk. I'm gonna set it to here, this level here, because I'm just looking across my screen and I see a bunch of resistance there that can act as potential support. I just see like 1, 2, 3, 4, 5, 6, 7, 8 candles, 9 candles where it interacted with this line. So I would set that as my support level. I have my overall target here at 207, and that would give me a 2-to-1 risk reward ratio. Anything above 1.5 is, I think, really good, especially in this market. And this could be a 1 week, 1 or 2 week trade until it gets up to 207, right? It could be 2 days. We have earnings in a couple of weeks, August 17th, so it could be a nice earnings run up. But that's why I like it to the upside. Downside, it would be, I'll show you why I don't like downside so much. And you get to a point where you could just eyeball this, but let's say break of low of day here, and your target is essentially, I mean, you could set it here, you could set it to the bottom of this. I guess if you set it to the bottom of this red candle, then it's better, I guess. I just don't like it, especially with the way that this one gapped up. It's a 1.98, so it's not bad. If you set it to like my first target, then that would be like a 1.5. It's, you know, I just like it better to the upside. You know, 2.18 versus 1. I just like it better to the upside, and I like the fact that we're at an area where we found a bunch of previous support. So it's a good place to set a stop. Versus up here, it's kind of, there's no invisible line in the sand here where I can, you know, there's nothing. So I like it better to the upside personally. For lows, let me look at the weekly. Did we do the weekly? Yeah, we did weekly. Right? Let's look at monthly. Hard reversal on the month so far. We can't call it a true reversal personally until this breaks above this range, and then once it does, then it'll be a reversal in my mind. But the setup is beautiful on the daily. And the only thing I don't like about lows is that lows chains are very liquid. So very illiquid. So the bid and the ask tend to have a very wide spread. So like the bid will be $1 and the ask will be $2. And now you have a whole $1 worth of wiggle room for your thing to get filled. And it's like, you know, unless you know how to trade that, it's not the best for people to trade, especially like if you're a new trader or you've been trading for less than a couple of years. Unless you know how to specifically manipulate those kind of chains, or you have a lot of patience. I wouldn't, you know, you got to get a chain that's very, very liquid. So So I'll look at some changes and see if we find a good one. But with lows, you got to just be very patient with your fills. Same thing with HD. Let's look at HD real quick. HD has pretty much the same exact setup. HD has a million lines on it. Let me just get rid of all of them. Let's get rid of all. Actually, I just clear the whole thing. So yeah, HD has pretty much the same exact setup. We're trading at the top of the box. HD is a little bit more pricey, but that means that it makes bigger moves. It makes bigger moves when you're trading it. Excuse me. Oh, there. So I mean, highest conviction, take it above 311. Take that into 315. Take that into 318. At a break of high of day. Below that, you can play play each of the lows. I don't like playing HD too much. BT is pretty good with HD, so tap into her. I like lows. I like low setup a little bit better because it had that like a harder pullback and then a bigger move out of the pullback. So I like that. That's like, to me, that's very very bullish and more defined, right? More. It's not as choppy. It's nice movement. Next one I have is Microsoft. Microsoft is within the level of this candlestick here, so I want to play this range of this candle. If we, it looks like it's curling right now, even though we did put in a green day. The market looks like it's curling overall, right? If we go back to SPY, one thing I want you to notice about SPY is, and you'll notice it more on ES, but one thing I want you to notice about SPY is higher high, higher high, higher high, pulled back, higher high, indecision, open lower, close lower, lower high. I think that we're working our way down back into this fib one more time for a retest. The 786 fib at 408, whatever this is, 408.39. It just feels like we're working our way back into that level. Why do I bring it up? Because Microsoft has the same look to it. Microsoft tracks the market pretty closely. And if I draw my fib from the impulse move out of that into where we are now, we pull back to the 786 fib. So I would look for it to find a base here. Microsoft, I wouldn't trade it until two scenarios, until it gives me until it touches this level here. So it touches the 786 fib level here at, I'm going to put it right above it, 276.58 at alert. And, or until it breaks above high of day, or breaks above high of this structure, this little box that it's in right now. I'm going to set it right above at alert. So above the structure, break of structure, or down here where we can retest this 786 fib and then show reversal. And then from there, we can potentially try to work, in the range. And then once again, we're in the range of this candle, this red candle. So down into the bottom of the range of that candle, show reversal on the 786 fib, double the second or third time that it touched that fib. And then from there up or break, just straight break. And then from there, we can take it up to at least 286.35. From there, take it up to 290. So Microsoft is pretty simple. I would just check the flow on it, see what the market's doing. Market goes up, Microsoft goes up. Market goes down, Microsoft goes down. You can play it both directions. And if it does break below that fib, you could do this. Break below fib, play there, play to the next fib at 270.80. So that's what I see for Microsoft. Very simple. Bad earnings, good move, dividend payout in a couple weeks. Very simple, nothing crazy. Market goes up, Microsoft goes up, market goes down, Microsoft goes down. Next one is Macy's. Macy's is forming this wedge. Let's see the weekly real quick. So there is a weekly demand zone. Weekly area where price moves rapidly up out of this area right here. I think I found it on the daily actually. Let's see. Yes, daily demand zone. Where it kind of formed the basing pattern on these 2 days, came up, tested a bunch of it, and then from there it kind of ran, right? And now we're just back in this area. You see some buyers stepped in over here, and then some buyers stepped in over here, and now we are in a wedge. And this wedge will make or break Macy's share price. I was in Macy's on Friday, actually. I had to buy something for a wedding I'm going to next week. I'm gonna be pretty light next week. I have a wedding. One of my friends is getting married in the Dominican Republic, so I'll be out there Wednesday into the next weekend. So this week I don't think we're gonna have study hall unless one of the guys want to take over, and I'll be pretty light in the server unless I can get some good Wi-Fi and get on in the morning. We'll see. But so Macy's is forming this wedge. We have supply here. We have demand here. Higher lows, lower highs. Over here we're forming higher highs, right? Over here, like with this local couple weeks, these past 2 weeks, we've been forming higher highs. In the broad spectrum, we've been forming lower highs, but we also been forming higher lows. Macy's, I don't know if it moves the same as it has in the past, but Macy's tends to pay when it does move. I haven't really been in tune with it much as I like to, as much as I was. But maybe I can fall back into tune with it. But I like the setup. I mean, we have clear upside, clear downside. You know, and then you'll get some big rangy days. Like we get days like this where price opened at went as high as $18, as low as $17. A $1 day on a stock on a company this big, 4% day on a company this big is great for options. So and this is like at my threshold. I don't really like to play companies that are under $20, but this is right at the threshold, and this company's paid a bunch in the past. They have earnings coming up in a couple of weeks. That August 17th, we keep seeing that date. So I like it to I personally like it to the upside, especially because we have that demand zone right there. But I don't mind it breaking down and then going back into demand one more time. But I think it's a very clean setup for Macy's. The next one is PayPal. Let's see. I think the 30-minute was the reason. Yeah, look at this 30-minute. So if you look at, so let's go back to the daily. So the daily, we had this kind of wedge. Prices squeezing a little bit. It formed kind of a cup with a handle, and then it broke through on some good earnings. Obviously, everyone, you know, was aware of what happened with PayPal earnings, where they went crazy. We made some money on PayPal last week, and now I want some more money because I'm greedy. So let's go to the 30-minute. We had this nice gap up on the earnings, and now we've kind of been forming this wedge, right? Gap up, forming this wedge, channeling down. But you can see that buyers stepped in on this at this level here, and again here. Buyers keep stepping in at this level, and so I want to see what happens when we get to the bottom of this, the top of this wedge, and back to this line. What's gonna happen, right? Who's gonna win? We do have this gap to fill to the downside, so I do like it for a downside play as well. I actually mark some levels here. Actually, I don't want that one. I want this one. I want this one, right? So we have, and I bet you, let's see, just zoom out a little bit more. That's where I got those from. I just put one over here real quick. Sorry, I'm just mumbling to myself, guys. Right there. All right. So, and then, so we have break of 94.51. One right there. All right. So break of 94.51. This is like the mid range between this one and this one here. Then we have this one. And then we can play down the dollar amounts. 92. You know, if you're attentive, you'll know when price is at 91.50, then 91, and then 90.34. These are your downside if it does break down. So you just want to pay attention to whatever's on the right hand side of the chart for the breakdown. For the upside, we have, I want to see it break that pivot, and this pivot, and then this high of day. And I don't think, I mean, if we, you know, maybe we get a ripper, right? But I think these are the levels to pay attention to for now, especially since they're strong pivots, especially this one here at 97.50, right? So those are your levels for PayPal. Let me go ahead and put a red line here. I'll do that. That's fine. I have to zoom into it, make sure I don't. That'll be your put entry. Break and hold, you know, form some candlesticks down here, then you play it down. Form some candlesticks up here. Maybe this is not the most safe entry, not the safest, right? Not the safest entry, the 96.28 would be the safer entry, and then work its way up. You know, just get back into this area of balance here, and then from there you can get back into this area of balance here, and then from there there's like no area of balance. It's just straight. You can cut right through all this right here, and get back into this area of balance at $101 for PayPal. So I like PayPal a lot. Let's see what else it has. Momentum indicator slowing down on a daily, a little bit. Right, it's pulling back a little bit. TTM looks like it's peaking, so it might come back a little bit before it goes up. We might get the put play before we get the calls. It might even come back down to fill this gap, but who knows? But I like it. I like it for a big move, up or down. This also looks kind of like a falling wedge. Now that I'm looking at it on the daily, kind of like a falling wedge, right? Which is bullish. So whichever one has more conviction for you, go ahead and take it. I like PayPal though. You'll probably see a play from me on PayPal this week. Next one is LYFT. LYFT. The reason why I like LYFT is because of Uber. Uber had this nice big move. It gapped up on negative earnings, and it's just been ripping, making higher highs every single day. It's back into this area of balance. I don't really want to draw lines on this, but we're here, so I'm just gonna draw that. Supposed to be darker. If you guys have any questions or any requests, go ahead and let me know. I know it's early. You guys are probably just having your coffee now. What time is it? 11 o'clock. So I don't expect much from you guys. You guys can just enjoy. And if you have any questions, just ask. See there, right there. Upside for Uber. I don't know if it has downside in it, only because I mean it does have downside in it. It has, you know, all these pivots. I mean all these some pivots and some breaks, and then the big gap. It has this here, and then it has this gap. I like the upside way better. Like, why would we work our way all the way up here and then continue to make higher highs to just pull back, right? So, but LYFT is a real one. LYFT is, I think, a much cleaner setup. Good earnings, good beat on both sides, good reaction to earnings, right? Good reaction to earnings. And now we're above all this previous resistance, right? We're above all this previous resistance here. And now we are getting into some interesting territory above these levels, and we can start to play this gap. Let's see. Take a sip of water. So this gap here. Now I'm not saying there's gonna be one big ass green candle that fills this gap, but what we're probably gonna get is incremental. If we get an upside move, continuation, right? So if momentum is on its side, because especially since the lines came from way down here, they're working their way up, and they can go up as high as up here, +4 from -4, right? Right now we're at 0, so we can work our way back up. And TTM just started firing to the green side, and look at how high it can go, right? So there's potential. Now I want to see it up above these levels. If it breaks and holds above 22.46, we can play it from there to 24, 26, 28, 30. And it's not gonna be this, right? It's not gonna like break into the gap and then just shoot up. It's gonna, you know what it's gonna be. It's gonna be slow, choppy, terrible. It's gonna be one of these, right? And then it might even calm down and base, and then kind of, you know. So I like LYFT. I like LYFT into the gap. I like LYFT before the gap. It has good momentum. Price action is great. It's above previous resistance. I want to see it trade within the range of this candlestick here, which is the high of 2172, low of 1959. So just stay within that range for a day, and I think that it has more to go to the upside. You know, and it might do the same thing. It might do like a gap up, and then chill for a little bit. Let's see. Although I like the move that I made on Friday. Friday did the gap up, and then continuation. It didn't do that gap and pullback it kind of continued. So that's nice. Like here, it kind of gapped up and then pulled back a little bit. Here, it gapped up and pulled back a little bit. This day, just gapped and moved, right? Especially after positive earnings. But a gap up and pull back into this and hold into like this area here, or this candlestick, this range here. I think that would be very nice if it did that. And we'll look at it in the morning and we'll look at it during the day. Set my alert at this line. Hold on. Right above the line, that alert. I want to see it kind of trade in that area. You know what's gonna happen Monday morning? My alert's gonna go crazy. So that's why I like on LYFT. I don't really have a downside play for it, so I won't force one. Next one is Match.com. The reason why I like Match is because two reasons. The number one reason is because we kind of fell out of this box. There was like kind of a range here. Let's go to the weekly. And it's really ugly, kind of shitty price action, to be honest with you. But yeah, the weekly's not good. Oops. That's Dominion. We spoke about Dominion last week, and we spoke about it on, I think, on Tuesday, whatever. But it made a nice move. Match one day. The reason why I like it is because it's really just one thing. It's really just one thing. Two things. The first thing is, out of a bad earnings report, we are making higher highs and opening and making higher lows. Everything is higher. Higher highs, higher lows, higher open and higher close on all of these 3 days after a bad earnings. And the real reason why I like it, and the real reason why it's on my chart, on my watch list, is because I saw, who was it? I'm on my phone real quick. Let's see. Was it TrendSpider? Let's see. I forget who it was. Oh, it's in my text message. That's where it is. I don't know what it is. Anyway, or maybe it's in my favorites. But anyway, they showed institutional, or rather insider buying. Insider buying. I think the CEO of Match. Here we go. Match CEO buys $1 million worth of shares just 2 days after the company's earnings report. So earnings was on, and I'm gonna go ahead and post it in the trade floor. I just posted the link for Match. Match CEO buys $1 million worth of shares just 2 days after the company earnings report. So if the CEO is buying shares, then why wouldn't you think that there's gonna be an upside move to it? He's not gonna buy shares just to show support. He's gonna buy shares because he's gonna believe that his money's gonna go up if he buys shares. So that's why he's buying shares. That's why you buy. That's why you enter some of these things. So I always look at insider buying. Are the insiders buying or selling, right? If they're selling, then you sell. If they buy, then you buy, right? It's that simple. That's the reason why I like it. And then that's the reason why I saw it. And then the reason why I like it also is because of the higher open, high, low, close on these 3 days. So I like it to fill this gap. Take it above break of day high. I don't know how liquid or illiquid the chains are on this though, so just be aware of that. I'm not even gonna put a downside play on this because if I'm the CEO and I'm buying, then why would it go down? It's something that he knows that we don't, right? So I like it to the upside. Those are your levels. Keep it simple. You don't gotta overthink it. Target. Let's see. So the reason why I like Target is there's two things, and there's two stories here. Right? The first one is we have this broadening. So the first one is we have this gap that's right above where we are now. And we've been forming higher highs and higher lows up into this gap, up into the range, right? Higher highs and higher lows, healthy price action, nice movement, nice consistent movement, right? And now we're kind of bull flagging. We have the flagpole here, and now we're kind of just flagging. Let me go ahead and draw some fibs on that. and we're right at the 786 fib, so that's good. We haven't retraced a lot of the move. And for those of you that want to see the kind of the bull flag, it's here, right? There's your flag. We're at the upper limit of the flag. I don't know what those those dotted lines are. Those are probably intraday lines. Let's see. Yeah. So we're in the flag. We're showing some strength. It's at the top of the. So the other thing is, and they have earnings coming up in a couple of weeks, so we might get a run up. So we have the gap, we have the flag, we have kind of an inverse head and shoulders, kind of a cup and handle, a nice slow and deliberate move up with a potential earnings run up. All bullish. The only thing that I would say is, why would I be bearish? Because we're at the top of the broadening formation and we've slowed down once we've hit that top of that broadening formation, right? Real quick, same thing with Nvidia. We've kind of slowed down as we hit the top of the broadening formation. So what that means is we can potentially come back to test the bottom of the range, but I think that we would need a catalyst in order to do that. What catalyst do we have? Earnings. So earnings works in both ways. It works and dividend, right? So they work in both ways, upside and downside for us right now. Now I just want to check to see, because I know that some of these who reported recently that there was somebody that put out, I don't think it was an earnings report. I think it was just a report saying that it must have been Walmart, saying that and if anybody knows, go ahead and I'll see you later, BT. If anybody knows, go ahead and let us know who it was, if you remember. There was one of these companies that said that, like, basically though they lowered their price on the increased supply to try to get rid of it, they're not able to, or something. There was something that was slowing down business, and I think they had a negative reaction, and I think it was Walmart. And so if it was Walmart and that was indeed the case, and I'll have to look it up, then Target might be the same, and we might not get that until earnings, right? So, or maybe right before earnings. I don't know, but I would just keep that in mind. I like it to the upside if it can break above this 168 level, break above and hold 168, because it really couldn't hold it on any of these days, even on this day. Break above that 168. From there, I would ignore the broadening formation. But if it can't break above that level, if it goes back to test it and can't break it, I'm going to take it to the downside. So 168 would be the ultimate entry. I think we'll do it in one day if we get a nice green candle. Go to 30-minute real quick. If we get something like, you know, like a nice open like this, or a nice open like this, we'll get right above 168. I also kind of see a head and shoulders forming here now that I'm looking at it. We have a shoulder over here. Shoulder. I like to look at both sides. I don't want to be caught bullish and then all of a sudden, thing rips to the downside. So we have a potential head and shoulders here. So it really needs to hold 168. It really needs to break and hold above 168 and really get above this candlestick here, 168.92, and that'll really show us. That'll invalidate the shoulder for us. So that's you need that in order to get bullish, right? You need that. You need this. I'm gonna just put on here break and hold. For calls, right? For calls. And again, the bearish thesis is we're right at that broadening formation. We can easily fall back down, test the bottom of the range. We have this channel. We can come back, test the bottom of the channel. There's a few things. So, if you see a target play from me, you'll know why. It's either at the top of the channel or the top of the broadening, coming down to test some previous levels, or it's up above. It invalidated the head and shoulders, and it's invalidated maybe the head at that point, and then we're gonna fill the gap. It's one or the other for target. But I like it to the upside based on the fact that it's slowly been crawling its way back up to this level. We didn't sell off hard when we reached here, right? We're slowing down, but we're not selling off hard, so that's really good. So it's something to keep in mind. Do I have any more? Yes, coin. How many more do I have? Oh, there's like 5 more. Okay, coin. They have earnings on the 10th, on the 9th, which is on Tuesday, on the 9th after hours, right? So we have 2 days of trading. Coinbase has just been going off since we started playing. I think we were on it a couple weeks ago, or a couple days ago rather, and every day I look at it, it goes off. Excuse me. So we did this kind of wedge pattern, gap up like crazy on some news. I think the news is still pretty good. The thing with coin is they get good news and bad news. Was somebody gonna say something? I'm sorry. Yeah, so the thing with coin is they get good news and bad news. And like I feel like we got bad news on one of these days and it still managed to gap up. So you know, maybe it was on this day we got some bad news. We were playing puts on this day. And it did what it needs to do. And now, you know, I think that they're reinstating their European business, or they're expanding something in Europe or something like that. And so it's just really, really good news that made it move up like this. It fell down. It didn't fill the gap, but it fell and it kind of found support. And now it's like working its way here. We found support down here at 87.93, and now we found the higher support at 90.63. So that means that they're bringing price a little bit up higher. Price is accepting a high, you know, price action is accepting higher price. So really, I just want to see a day where it kind of holds above the VWAP on a 30-minute. It couldn't do it on either of these days. On days that it does do it, it ranges higher, right? It couldn't do it on any of these days, but it still remained flat. It kind of formed this wedge. So I like it. I like it to the upside. I want to see it get above, hold VWAP obviously for the day, right? Let me redo that line so you can see where the origin is. And it's really, honestly, it's probably further back. Let's do it there. And then take that pivot out, take that pivot out, and then take that out. And coin is at that dollar amount where it's really fun to play. Right there. Okay. So coins at that dollar amount was really fun to play. It moves 5%. That's a $5 move. Very easy to understand. You know, you can go $5, $10 out the money, get a nice move either direction. I don't see coin going down below 77.61. I see it testing that 79.68 once more, possibly, because it just did it for such a brief amount of time. But if it does fall down, so I don't see it going below this 77.61. I do see it going up above 97.30 pretty easily and into the 100. 100 is going to be a psychological number, so I would just watch out for that. But yeah, I like Coinbase to the upside. I don't know if we get downside anymore. We'll see. But whatever gives us, coin is like one of those that I've been watching pretty much every day. So you'll know. And they have earnings on Tuesday, so maybe we get that run up. Maybe this is the run up, right? Who knows? Maybe we'll get a nice day out of it. Next one is Netflix. Netflix is consolidating right below the gap. Consolidating right below the gap. Now, Netflix already has reported earnings. They've released their, I would count this day as a gap too, actually. I'll put it to there. They released their intention to increase their video game segment. They're partnering with Microsoft. I'm sure there's other partnerships in the works. If they're partnering with Microsoft, I'm sure that Meta's in there somewhere, because they're not going to stay out of the action, right? They're partnering with Salesforce as well, in order to onboard all the people who they're bringing in for Netflix gaming segment. I have a feeling they're going to make an announcement soon. I don't know if it's going to be soon, like here, or soon at earnings, the next earnings. It really depends, but I think they're going to make strides. That Bandersnatch, I don't know if you guys remember Netflix, Black Mirror Bandersnatch was like one of those books that we used to read as kids, where you kind of pick your own journey, right? Like if you want to go this way, then go to this page. If you want to go that way, go to that page. Bandersnatch was just like that, and I thought that was really cool. And so I think that you're going to see more film-based movies, or excuse me, film-based games that are based on stories that are in a film, right? So especially those Netflix ones, maybe you'll see a Squid Game video game for sure, right? For sure, for sure. Also, they announced Squid Game 2, and which is coming out soon, and something else. So they have a few things in the works that will make them go bullish. They've already announced their price increases. So I'm just thinking of what potentially they can say that'll bring them back down. You know, they already lost their viewership. They announced it. I got water all over my keyboard. They are what else? I think Russia affected them. The fact that they're cutting, they're not gonna allow people to share. They're not gonna allow people to share, and guess what's gonna happen? People aren't gonna sell them. Whoever's paying for Netflix is gonna just continue paying for Netflix. Whoever's not paying for Netflix, their family member or their friend, their ex-boyfriend or ex-girlfriend who's not paying for Netflix, they're gonna go buy Netflix. They're gonna go spend the $15 a month because they're so used to it, and they're gonna go get it. So that's only bullish for them. So I think Netflix goes up. I am looking for, and I'm talking to Jake and to Frank about potential longer dated swing. Let me get rid of this. You guys see the gap here. I don't need to have this here. I'm talking to Frank and Jake and Jay for a longer dated swing once we break out above this box and above this candlestick here. Even though this is to me this is probably high volume, but I don't care. I don't even care. If it gets to the point where it's within the range of this one candle, then I think that we're already in the gap, in my opinion. So we're trading here above these previous resistances. We're at a level where we're forming a nice base. From here, this looks like it's forming a supply or demand zone. So it really depends on, I think they're waiting on a catalyst to either let sellers take control and bring it back down, or let buyers take control and bring it up. I see upside for this, especially since we made a nice move with good earnings. Like, we have the catalyst for the upside. So above, and if you guys want to trade it before the gap, above 232.07, place at 235, 235, 240, 240, 245. So let me go ahead and just mark these down. Let's see. 235, 240, 245, 250. 250. Whatever. And Netflix has low of, let's see, 211, high of 224. So Netflix can put in a $10 day pretty easily, especially on a good catalyst. They can put in a $10 day. So don't sleep on Netflix. Let's see. I'm just gonna make these some round numbers so that you can see them and you have them. I'm not gonna really set up a downside play. I mean, there's one there. The downside would be break below. It's just so choppy over here, like, break below there, get to here, from there get to here, from there get to here, from there get to here, right? I don't like that last one. So you can play downside. There's an equal amount of risk reward on both sides. I think that upside has more potential, right? So, and especially with all the catalysts and all the news is out already. They've already told you how many viewers they lost. They already told you, like, everything's out. So, and we're kind of trending upwards. You can see it forming higher highs a little bit, higher lows. I just see it more to the upside more than anything else. So that's Netflix. Let's see what's next. I have like two more. Nvidia. It's back in this box, this weekly supply zone. Go to the weekly. You see how these two kind of formed the bodies were in the same place and it kind of fell hard from there. It's not perfect, but I see it on the weekly. So we're back in that area. We can easily come back down and test the bottom of this box. So we can do one of these. From here, just back down to the bottom of that box. If we get below that box, then you can play down into, let me get rid of some of these old lines. I don't know which ones they are. Are they these? Let's see. Okay. Some of these older lines. This one? Yes. Right. No. Okay. So with Nvidia, oh, I got rid of my broadening. Okay, hold on. Gotta bring that back. Oh no. Okay, whatever. We'll just redraw it. There it is. All right. So with Nvidia, we're at the top of the broadening. The only thing that I think that can bring us down is, I'll leave that line. Only thing I think that can bring us down is something that comes out here, or if this supply gets really strong, if they rebuild the supply and it comes kind of crashing down. If they put in a green day, even though it was a green down day, like it broke the range to the downside of the previous day. So you know, below this 181.80, 181.80 cents, right? 181.80, and then down below, I would say this level here, down below that, will put us back into the 169. So just these three levels here. 4 levels: break of day, low of day, and then break of that line there. Will bring us back into this level, and then from there we might work our way back up, or we might do one of these. Rip above Thursday high, which is just right around the highs of these days. Get to the top of the box, and then just work our way up into these pivots here. You know, it really depends. It really depends. I don't know if there's a catalyst. I mean, we have earnings in about a month or end of month. Maybe one of these other companies reports, like AMD reported, and everything moved up. TSM reported and things moved up. MU reported and things moved up. LRCX reported and things moved up. You know, Nvidia is all within the same company, so I think Nvidia is a crowded trade right now, so that's why it's moving a little bit slower. But I like it to the upside, break above these levels. I like it to the downside, break below those. Look at the 30 minutes to see where we think it's gonna go. Okay. I don't have any of my moving averages on this too, which is interesting. Let's see. Yeah. Kind of a head and shoulders here. Shoulder, head, shoulder, lower high, lower high. I want to see what it does with this level, 186.61. It might come down below it on open and then open up above it on the next candle, or close above it on the next candle. There's a lot of chop kind of in this area. I need to see what it does with this level. I have a feeling it's going to come back down and test this level. If it breaks down hard, then we're going straight back to this pivot down here at 181.39. If that breaks down hard, I don't think this was going to break down hard because of all this flag here and all the sideways action here and the pivot. But if it does, then more downside. I'm looking at, now that I'm looking at it, it looks like it has just a little bit more downside before it works its way back up. Because it looks like this. This is perfect. It looked kind of like this. Like it's like chopping its way up, and then it just felt pretty hard. Felt pretty hard on a retracement. Same thing, chopping its way up, and it looks like it wants to just kind of retrace back into some of these areas here before it works its way back up. So that's what I see for Nvidia. Apple. My Apple chart is tatted up. All right, so let's see. Apple looks like it's forming a kind of an evening star, but we had a green day. This day is now within the range of this day. So we're at the mercy of this day. We might chop around for a bunch. Let me look at the 30-minute real quick. Chop around, right? We might just chop around a bunch. Now, the one thing I do see is, so let me just draw this out. It's hard to be bearish on Apple, but I'm gonna try my best. So we had this, and we have this flag that broke down in the morning and retraced the whole thing. That's bullish, you know. So breakdown's bearish, the retrace is bullish, and then it kind of fell down again, but now it's forming higher lows. It can easily fall down again. Like I just see like another breakdown very easily. Very easy breakdown. So So it really depends on what it does with VWAP. Same thing as whatever, I think it was Target or Coinbase. As long as it holds VWAP and it'll stay above, it'll make a nice move. If it stays below, it's still bullish because it wants to get back above. So now it's fighting the VWAP, right? Even here, it's fighting VWAP. Here, once it's above VWAP, it goes up, right? Most days when it's above VWAP, it just moves up. If it's below VWAP, it's fighting to stay above. It's fighting VWAP. So let's just see what it does with VWAP. We're in a supply zone here. As you can see, we've been selling off a little bit every time we kind of test it. We've sold off a little bit. So it's just a matter of time before we take out all of the supply and work our way higher. Apple leads the market. Apple's the biggest constituent of S&P. So whatever S&P does, Apple does for the most part, right? They look pretty much identical. SPY and Apple, pretty much identical. So I would just keep an eye on the market, keep an eye on Apple. If the market is going down, play puts on Apple. If the market is going up, play calls on Apple. In terms of levels, you got your 165.42. If you want to take a risky entry, the safest entry would be above, I would say above here, 165.56. I'm just looking at these wicks here, just above the wicks, 166.59 above the wick, and then play that into like 168. Below that, 164.08. Play it to 160, 158. Let's see the daily again. Yeah, I mean, we got some gaps to fill too. Like all these gaps are filled already. This gap is filled. There was another one. This gap is filled. We have this gap to fill, so maybe we pull back just to fill it. Right? Is that same gap on SPY? No. Okay, maybe not. Who knows? We'll see. We'll see. But I do see the same kind of curling on SPY working its way down, losing bullish momentum. Right? Peaking on the TTM. So I do see it kind of pulling back a little bit. That'll give us a nice downside on Apple. Down back to, you know, let's give you a more, now that I'm looking at it, let's give you a better break of day low into, there's a lot of levels here. Let me just get rid of all of them, start fresh. Break of day low. Just take it to each of the day's lows. Take high. There you go. That's it. Those are your levels. Upside, downside. I'm leaning towards the downside. Especially, let's see. This happened already? That happened already. Okay. So we'll see. We'll see. Do I have any left? Yes, I have 3 left. Okay, Snow. Basing, forming higher lows. Look at the weekly. Weekly has higher lows. Broke out above previous resistance. On a weekly, now we're at this level. We can get back into the range of this candlestick. So break above 165.69 can give us 179.95. Nice 10-point move, 15-point move to the upside on one day, potentially. Right? So, and momentum indicated support and upside move. We just started flipping bullish on the MACD. TTM is put in its first bullish day on Friday, and we have earnings in 2 weeks. So there's a potential for a run up. I like Snow above 165.69. If you want to be safe, call it 170. Let's see what the top of this wick is. 168.41. I would just call it 170 at that point, right? Above 170, play to 175. From that, play to 180. 170, 175, 180, right? Let me go ahead and just notate that. 170, 175, 180. Nice and simple. For Snow. Downside, I don't really see a downside setup. We have support right here. Obviously, it acted as support on this day, and we have support right here. I just don't see a downside play. I don't have one for you guys. The next one is Etsy. Etsy's up above all previous resistance from this choppy zone. Etsy's very expensive. For whatever reason, Etsy's chains are, and maybe it must have just been that earnings week, but Etsy is extremely expensive. So, I mean, if you like it, then play it. I like it to the upside. I like it to continue, especially with the good earnings. We're having what's called earnings drift, where the price goes in the direction of whatever the result of earnings was. So I see more upside to this. That 110.95 is a strong level. The next level will be 114.29, and another very strong level will be 118.74. With Etsy, I would buy a lot of time on it. I would buy a couple weeks out or a month, and I would go as far out as you can. I wouldn't go, like, if you're doing this week, I wouldn't go any further than 120. If you're doing, and even 120 would be quite far. If you're doing next month, September, I wouldn't go any further than 125. But you'll see, if you look at the chains, they're very expensive. But the price action is nice. I mean, it did exactly what we wanted it to do on these days last time we analyzed it. So, right, it was here, fell hard, came back to the resistance, and I was looking for it to break up, and it did. So, for Etsy. So, and the last one I think is SQ. Is that the last one? Yeah, it's the last one. Hour and a half. Not bad. All right. So SQ had this wedge, broke out of the wedge, came back and kind of tested the area where it found resistance in the past, and then formed kind of a handle. Right, here's your cup. The red is your handle, and then kind of undid the handle in a couple of days, and it broke up, and it put in a nice. The reason why I like SQ the most is because of this bullish engulfing, on the day. Now, the one thing I don't like about SQ is, yes, we had this bullish engulfing. We got a bullish engulfing, which means we put in a green candle bigger than the previous candle, but we didn't close higher than the previous close, right? So this has the same look as like Microsoft and Apple, where it's trending downward in the past couple days. Now, SQ, one thing about SQ is that it doesn't necessarily go where the market goes. Sometimes it doesn't follow the cues, right? QQQ. Sometimes it does whatever it wants to do. And so I'm kind of banking on that for SQ. Potentially, right? Now, what I want to see is I want to see above 84, 86. Just kind of hold this level here. If you look to the left, you see a bunch of chop, a bunch of sell pressure on that side. So we just have to maintain above that sell pressure. If we stay exactly where we are, we'll be fine. If we break above and hold above this level here at 90.99, so pretty much above yesterday's high or Thursday's high, then we have a chance, like break it and hold this area here. Then we have a chance to kind of test some of these upper levels, right? And they're clean. They're very clean levels. So I think that get back into this zone, we can kind of work our way up. Especially that, you know, 100 is going to be tough, but we can work our way back to the 100. The 100 will be a magnet. I actually want to see what the moving averages look like on this. And that's where we rejected. We rejected at the 100-day. That's another reason why I kind of caught my eye. We rejected at this 100-day moving average, but we had the 20 crossing the 50. My 20 SMA crossing my 50 SMA to the upside. That's very bullish. So now, I don't know, maybe we fall down, come back to this support level here at 76-ish, and then catch up with the moving average, and then from there try to work back through that 100-day. Where's the 200? I think it's at 1 something. Yeah, 200 is at 128.44. So work our way down into this support, previous resistance, future support, and then kind of work our way back up. We'll see. I'm gonna go ahead and notate it so that you know, we'll see. Maybe it won't even go that far. Maybe it'll come down and catch the 20 up here somewhere and then work its way back up. So that's what I'll be looking for SQ. What else do I have? I don't have anything else, guys. Neo looks good. If you guys don't have any requests, you can, I mean, if you do, jump on a mic or drop it in the trade floor, drop it in any one of these channels. Yeah, let's look at Tesla. Yes, sir. Let me get rid of, I want to clear my chart. Hold on, let me just clear some of these levels out real quick. Clear some of these levels out. All right, so with Tesla, now Elon said that, so they approved the 3-to-1 split, which is approved for August 25th, right? And so before anything, I don't know if they're going to show previous splits. Okay, there's a previous split here. That's perfect. So let me zoom into, because now we're back into the territory where we're gonna move into splits, right? So we had earnings on July 22nd, and then we had earnings July 22nd. We went flat for a bit. We pulled down And actually, this I remember exactly what this was. This was a wedge that broke down and then gapped up after hours. I remember exactly when we were trading this one. All right, so we got that, and we have this, right? So we have this wedge broke out pre-split. Actually, I think the split announcement might have been made on one of these days. I don't think it was made on earnings. I think it was made on this day, and after hours it gapped up, and it went from 278 at the close, or rather 274 at the close, to 294 at the open. So 20-point move, and I think Tesla was trading 5 times this price. So it went from 1,000 to like 1,100 or 1,200, something like that, overnight. Nice gap up, and then it moved right. It just went crazy from there. Right, it went crazy. It went all the way from down here all the way to make this high, all-time high. I remember trading this whole damn thing. It did another pennant over here. I remember Tesla pennants playing out really, really well on Tesla. So it ran up after earnings and before the last split, right? And so if we look at it now, we had a positive earnings and we have a split coming up in a couple of weeks. Now we had the same kind of wedge. It broke out of the wedge. It's in a broadening, and it's like right in the middle of the broadening. It's at a weekly resistance level, and it couldn't hold it. So what I'm looking for with Tesla is I'm expecting a run up. Like, Tesla fans they're just crazy. So I'm expecting a run up. I don't think it's going to be as aggressive as it was in the past because there's so many shares. There's so many shares in the market. It's harder to move now. But just zoom out a little bit. Yeah. So what I see with Tesla is I wanted to hold this 100-day moving average. So it found resistance on it a couple days before, and then it gapped up and tested it as support. And now I feel like it's going to come back to test it again as support, right? Let me just make my candle a little bit bigger, and I want to see something real quick. Draw my fibs on an impulse move from here to here. Yeah, so it made this move up, and let me just go ahead and draw it. It made an A to B, right? And then move that over. It made the A to B. B pull back to C, to right at the 50% fib. Right, let me just draw this here real quick. I'm not saying that, and I'm not saying that Tesla's gonna get rid of some of these lines. I'm not saying Tesla's gonna do exactly the same thing it did before. What I'm saying is there's a potential for Tesla to, right now we pull back to the 50% fib. Not what I wanted. We pull back to the 50% fib, which means we went up and undid 50% of the move. Right? And we couldn't hold that 200-day. This is a 200-day right here, this black line. So we couldn't hold the 200-day. We fell down below it. Elon said something about this next quarter is going to be our best quarter to date. They're super aggressive. He's taking it easy right now, actually, because I think he's very confident in the fact that they're going to meet their targets. And he said something about the Tesla share price, but then he sold some of his Tesla on this day. So now, when the insider sells, you sell too. But the only thing is, he might just be taking profit. I mean, I don't know. Who knows, right? Who knows? He's extremely bullish on it. They have the split. The splits usually, as history shows, the splits are usually really good for Tesla. And I bet during this time, there was a major announcement that he made back in 2020, August of 2020, where there was enough of a catalyst, not only just a split and like the meme era, but also like an actual tangible financial catalyst to make this move up. So now I think that we have the same thing going on here. I'm not sure what the financial catalyst is. So I have to go back to the report and kind of visit it. We did have a great beat, and it made a nice move out of it. He took some profits. It could also be like a 200-day thing where people sell out the 200-day. But I want to see it catch support either hold this 50% fib at 855.17. So either hold here. It's very important that it holds this area, because if it doesn't hold this area, then that means that it's going to retrace more than half of the move. If it retraces more than half of the move, then that means that this move might not be sustainable, right? This is like a kind of a fake out, a fake move. Big move up, and if it comes all the way back down, then that means that that whole move is undone. If it only comes down by half and it holds, then it can continue, right? A, B, C, D, if anyone took that lesson with me. Start of the move is A to B. B to C is the pullback. You can get it on the pullback. C to D is the rest of the move, you know, the trade that you would take. So if it doesn't hold this 50% fib right here, that range between 851 and 856, I would look for it to hold. I would look for it to hold where this next fib is, a 38.2 fib, or 0.382, 38% fib, whatever, however you want to read it. Where it's going to meet the 100-day moving average, just this white line. And depending on how, and it depends, it really depends how long it takes to get to this level. If it does, right, if it chops and then breaks, if it does that, then the 20-day can catch up to it. So we have the 20-day and the 100-day that will catch up to it, potentially right around this fib level. So those are three reasons: fib level, 20-day, 100-day. You know, right now it's two reasons: fib level, 100-day. In a few days, it could be three reasons why it should hold in this area. Previous resistance, future support, that's four reasons, right? So I want to see it hold the 50% fib, which is this range between 856 and 851. If it can't hold that, I would love to see it hold between 831 and 837. I think that'll be the ultimate spot where it would hold. And if it cannot hold that, then we just play the fibs down. Play back to 809, play back to 800, and then from there to 760, 770. For the upside, we gotta really we gotta get above this weekly resistance at 884.49. 884.49 is the level to break to the upside. Because that's a very strong resistance, and we've done it in the past, but we really need to break it and hold it. From there, we can get above the 786 fib. I mean, really, let me just draw these out. Let me write these out, because it's a lot going on the chart. Upside. Weekly resistance, 884.49. Then we have 900, which everyone knows is a strong level. 786 fib at 905-ish. 78% fib. And then we have, you know, from there you could do 910, 920. 910, 915, 920, right? Will be your upside levels. And then the final level will be 940, where it would retrace the whole move. So we could just do, let's just, yes, 920, 920, 930, 940, right? Play like that. And then for the downside, we have the 50% fib. Oh, what the fuck? Sorry about that. I don't want that. Delete that. 50% fib is where? Here. 854.32. 854.32-ish area. Box or range. Color range. And then from there, we have the 840. Let's call it 850, because 850 is a hard number. 840 would be the 38% fib plus 100 SMA, 100-day SMA. And then underneath that, we play to 820. And then underneath that, we play down back to retrace the whole move. But I'm not going to go that far for now. So that's what I have. That's what I have for Tesla. I'll go ahead and add this one to the, I'll throw the analysis, since everybody likes to play Tesla. So I'll throw the analysis in the trade floor, in the Watchlist channel. What else you guys want to look at? And let me look at real quick while you guys think a little bit. We're losing momentum on the MACD. So we made the move from way down here with the MACD line and the signal line from way down here to way up here. And so this signal line kind of works as an RSI where it goes up and down, up and so now we're up and we're working our way down. Right, the signal line looks like it's flipping. And then I just want to draw. You know, it's down. I'm not gonna get it perfectly, but it's down, right? Maybe we just do this. Do this. So this is important. Let's see. So during the time that the MACD is forming lower highs, these lines are forming lower highs. Price has, and I guess price is also forming lower highs, so it's not that bad. I was looking for a divergence, but it's not there. I was looking for a divergence. So what I was looking for is, I was looking for this trend line to be going up while MACD is going down, but it's not there. It doesn't exist. There's no divergence there. They're both in the same direction, so that's good. That supports Tesla to the upside. And then TTM is losing a little bit of strength. So I mean, again, I think right now it looks like we're gonna come down and retest this 50. And if we break down below the 50, we're gonna try to test this this 38.2 fib, 100-day, pretty much where the 100 days at. Let me move this so that it's a little bit doesn't look so crazy. Where we at here? There. Okay. I think we're gonna come back to this 100-day. Find some support or test it, right? And then see what it does. If it gives us support, then we kind of work our way back up. If it fails support, then we're gonna come down and test this one here. Maybe this previous start of the move for Tesla. So if history repeats itself, then we'll have a nice run up into the split. Maybe we just have one down day, right? Who knows? But again, the market did this. It's trending downward. It's trending downward in these past few days. Apple is trending downward these past few days. Let's see. I mean, NIO, they don't really compete with Tesla. These Chinese tickers don't really compete with Tesla anymore. Ford trending downward past couple days. GM trending downward past couple days. So, and GM rejected the 100-day. So GM has a nice setup on it too. So I'll post one for GM also. But yeah, that's what I see for Tesla. I see it going back to retest some of those downside levels before it works its way back up. I don't see direct upside tomorrow, and I could be wrong. We could open at 850 or 900, and we could open at 900 or 950, and just gap into oblivion. But who knows? You guys have anything else you want to look at? Otherwise, I'm gonna call it. I'm gonna go have my coffee and breakfast with my wife, or lunch at this time, I guess. Yeah, I don't see anything else. All right, guys. So that is it for this week's weekly watch list. Thank you for joining us. If you are watching this video on YouTube and you would like to join us, visit gorushgang.net. And from there, you can click this join us link. We are offering a 7-day free trial. Your job within that 7 days is to make enough money to afford to pay for the month, which is $75. And now you're in for free, right? If you make your trade, $75, now you're in for free. And then from there, I mean, we've had plenty of trades. We took Tesla last week from 85 to 1500 in about 30 minutes live. And that would have paid you about 20 months worth of your server. So, and this is a fun environment, safe environment where you can learn and not feel silly and ask questions and level up. So thank you guys for being with us this week, and we will see you on the next one. Peace.